I do to make it through the times we had. I see it now, I see it now. Real love, now I'll break through to show to you that I'm more good than I am bad. I'll work it out, I'll work it out. And I'll be somewhere that you need me, and I'll be holding my breath, waiting for you to show. Afraid to say real love, now I see you, and I'll make it through to find the life that we once had. I see it now, I feel it now. Real love, now I see you, yeah, you know I do to make it through the times we had. I see it now, I see it now. Now I'll break through to show to you that I'm more good than I am bad. I'll work it out, I'll work it out. And I'll be somewhere that you need me, and I'll be holding my breath, waiting for you to show.
Okay, guys, what's going on? What's going on? What's going on? We are live. Just give me a sound check, and we'll start it up. Give me some feedback on the sound. Sound, video, all that good stuff. Can you guys hear me? A little bit of a lag. A decent amount of people in here. Go ahead and hit the like button. I haven't said that the last few times, but I'll tell you what, these streams definitely deserve more likes. More likes. Listen, guys, more likes. No more likes, no more streams. Just kidding. But if you're just getting on, this is the BlockRoots YouTube stream, YouTube channel. Go ahead and click the subscribe button, click the like button. We like all that that positive feedback. If you have negative feedback, go ahead. Give me the negative feedback as well. Eat it all up. All right, so it looks like the sound is good. Got a few people I'm familiar with in the chat. What's up? What's up? What's up? What's up? What's up? Mr. K, I heard they're buying ICX and TR. Listen, Mr. K, if you don't provide some context and say that you are in Blockroot and you say something like that, I might have to beat you through the microphone because God knows ICX and TRX they're not something that we are buying. I used to buy ICX back in the day. 2018, I was big into Icon. It's so funny how all the dinosaur stuff is kind of getting a little bit of life, right? But okay, what's up, guys? What's up? What's up? What's up? What's up? All right, sound looks good. Playlist is playlist is nothing special, honestly. It's I had to put a compilation of non-copyright infringement music together, and the last two streams I had like something that came from a non-copyright playlist and actually it was copyright protected, so who knows. If you're making music, I mean, I would assume you want to copyright it though at some point, right, to monetize it and to benefit from obviously what is talent and hard work. So it makes sense. But the playlist, I'll go ahead and that last track was Real Love by Levianth and Ace Jacks, and this more recent song was Mortals by Wario. But I'll share that. Send me a DM if you have a question, and I'll go ahead and share the stream. I put it together. It's like a little playlist. But anyway, it's not even the kind of music I really listen to. But good evening, good morning, good afternoon. Thank you guys for tuning in to the stream. Let's transition the scene. All right. Got the sound good still. Go ahead and hit those likes button. That likes button, like button shit. But yeah, this stream is sponsored by our partners at Phemex. So we're probably going to have a bunch of new participants in the stream because Phemex is we're going to be doing live trading during our streams from time to time, where hopefully the entire focus of the stream will just be taking advantage of conditions as they hopefully improve, right? So not to say the conditions were poor. So I've gone ahead and I've put together this little Phemex account. I deposited about half a BTC in it. So if we see any opportunities with altcoins, some of the pairs that Phemex lists, Uni, Algo, Dot, I have favorited, Wi-Fi as well. These are things that I'm focusing on, period. If you're not already familiar with it, Phemex is the fastest crypto derivatives exchange. They have spot, they have contracts, and they have a yield generating program for USDT. So go ahead and check them out, Phemex.trade. As a reminder, we are partners with them. This stream is sponsored by them. If you're new to the stream, my name is Ryan, aka Kennering Clark. Thank you for coming in. On behalf of myself and my partner Josh Rager, we are the co-founders of BlockRoots, which is a educational platform focused mostly on market profile and order flow, but there's a lot more to it, I think, than that. We have quite a robust community now. But we're going to go over BTC. We're going to take a look at some of the alt DeFi pairs, talk about market conditions, take some questions, do all of that fun stuff. So does that sound good? How's everybody's weekend? How is everybody's week so far? Excuse me, not weekend. I meant to say week so far. It is Friday. Holy shit, we're going into the weekend, and I almost left was saying weekend. So how was everybody's week so far? What are we feeling going into a pretty big event next week? Is everyone familiar with the event I'm talking about? So before I get started, what event should we all be paying attention to next week? From that calendar day when the first second strikes, why should we be paying attention to the charts, right? In particular, I would say BTC and ETH, but pretty much everything. What's going on next week? Can anyone tell me? I hope that everyone is familiar with this. I know one person's going to answer, and then, fucking everyone's going to say, yeah, yes, exactly. It's not an IPO though, Acom. It's actually it's a direct listing. So direct listing, so you can just hop on your brokerage exchange platform rather, and it'll be listed on the NASDAQ. Yes, so that's on the 14th. And I'm not really certain at all going into that what kind of event that will be for BTC. You could spin both sides of it. You could say that it might be a sell the news event. People are long into this event, and market pricing in any future expectations. This has clearly been something in the forefront for a while. And yeah, sell the news always, right? Unless it's breaking news, unless it's some type of major catalyst that just comes up and no one was aware of. Or, you say that this is really bullish for crypto. It's at a good time because equities are looking good. All-time highs today in the S&P, all-time highs in the Dow Jones. And we've seen how sort of retail has behaved the last 6 to 12 months, 6 months to a year. And Coinbase is proxy on the crypto markets, and you're going to get this whole retail surge just because of that. Retail that maybe doesn't think that crypto is accessible. They're not really interested in the current interfaces or the hoops you have to jump through and setting up an exchange and all the difficulty that comes along with it when you're new, right? There's the meme about transferring BTC. Every time in the beginning you're like checking every character in the hash, and then at the end you do it blindfolded. But for a lot of people in traditional markets, they might look at Coinbase as a safe play on crypto markets as a whole. And I think that it's net positive, and you're going to see Coinbase. I mean, if you're going to ask me like gun to your head, what do you think is going to happen? I think Coinbase is going to coin, because that's the ticker. I think there's going to be short-term volatility, but I think that in the coming weeks afterwards, it's going to be trending pretty hard. I don't think it's going to flop. I think that Coinbase has a really good, obviously they have a really good business going, okay? They generate a ton of fees, and they're probably going to put a lot of money into marketing. So they haven't done that yet. So expect to see Coinbase kind of everywhere. That's what I would do, right? Pretty much any tech company. So I think it's a positive, right? But on the 14th, you should have an idea of, you should be, well, not everybody, myself, I'm an order flow trader. A lot of my trading has to do with shorter time frames. I have my long-term bags. Sometimes it gets a little mixed up in the middle where you're letting sometimes longer this is what you never want to do. You don't want to let your longer term thesis sort of impact your lower time frame trading. You don't want too much of that sort of style creep. But anyway, all right, such a howler over TTC. Retail flocks under dollar altcoins. Yeah. Why is the buy market? But no, I don't know. JE, I'm not going to give any specific financial advice. As a reminder, everything in the stream is strictly my opinions. None of this is financial advice. So take that as you will. But thank you guys for joining today. Let's take a look at BTC. Just if I could leave you with one thing, on the 14th, I will be focusing very much on what is taking place in the inflow in the tape and seeing how buyers are feeling about this, whether or not this is going to be bid or whether this is going to be offered. It remains to be seen. So looking at BTC right now, first just the higher time frame levels to recap some of the more important contextual levels. I think the most important level on this chart right now, and I'm obviously this is not going to change from what I've said the last couple of weeks. Why is my mouse kind of skipping around like this? Is the 60K level. 60K level, if we're looking at this structure as a whole, so if we just put on something like, I know if I use this chart, it's going to make it ugly. It's already on. I labeled it for you. If we put on a profile, so I'll go ahead and do this just to show you that, there's been sort of intermediate trends within what is a larger range. You see that the value area high, value area low, meaning where we've spent the bulk of the time and activity, this is by volume, so this is by activity, where the market has been most comfortable has been within this 60K to 50K range, right? So 60K I think is probably the most important contextual level for bulls, being that we've had all this time sort of grinding against this level. We still have a series of, I gotta fucking turn something off because I don't know what's going on with my mouse, but it's not moving as fast as I wanted to. Now I can't even see it. Hold on one sec, guys. Okay. Maybe it's a battery issue. Wait one sec. Let me just unplug the Bluetooth thing. Should be good. I'm gonna get rid of this. I have the tape open. I have a bunch of stuff open on the other screens. Maybe that's chewing up a lot of the computer's energy. Even though I don't know why that would happen, but this morning it's been doing that. Anyway, so I got a new Razer laptop coming in the mail, which I'm really excited about for vacation. But this 60K level, I think it's the most important contextual level on the chart. You have your highest daily level that's above that. You have your weekly level that is, slightly below that. But I think 60K being such a obvious, large, round number, right? A good number for people to anchor onto psychologically. So if at this point, now that we've spent this amount of time sort of rounding against this resistance, if we see a really clear move, high volume, high volatility move through that, I don't think that this is going to be another fake out. I think that this is the kind of move where you don't get much of a pullback and you have to kind of ape in, not financial advice, but how I'm going to, probably how I'm going to play by adding to this position or adding to positions period is even if we get the move, let's say, the 60K is a level, I always say like, okay, 60K is a level, but where's the candle going, right? 60K is the end zone, but we're probably going to put a pretty big move through. And we're probably going to be putting a pretty big move through the goal line and get pretty deep into the end zone. So I think that 60K is the level, but how does it occur when it occurs? It might be something that moves immediately to 61, and then you're kind of just wondering, all right, do I buy this now? It's flagging on the lower time frames. I think it's for me, it's definitely a buy. After spending this amount of time at this level, I think it's definitely a buy. In terms of lower time frame levels, in terms of levels lower, I think that you would have to lose a lot to change this structure. I think that this structure has done actually a really good job in holding up. Ranges create a lot of equivocation, a lot of sort of uncertainty because you don't have the conviction that direction brings when you have high directional conviction and a strong trend. So people they lift up rocks and different corners of the carpet to see maybe where there might be some evidence into what direction this is going to break. And often it is the case that it's just overthought because if you zoom out, the higher time frame trend hasn't broken yet. And Bitcoin for a top, this would be an extremely low volatility top. So, I think that we always have to be mindful of the lower time frame levels. This more recent daily swing in this higher low right here is at right around 55. We have some intraday levels between this point and what is the much lower level around 52.50. But I think you really have to start losing some major levels for BTC to really change what has been transpiring for the last month. And even then, with in terms of downside action for BTC, I think that it's very, I'm not certain about where, this is going to sound funny. I have less certainty about where Bitcoin goes after it breaks through 60. I think that it has a good amount of follow through. But I feel with a fair amount of certainty that I could say, okay, if we lose 55, we're going to find some support at 53.5. We're going to find some support between 52 and 50. If we lose 50, we have some support back down at key weekly level and key daily level back around 45. I'm willing to bid those areas. Let's say the market kind of nuked all the way down to the 30s. I think this is absolutely a buy the dip opportunity because a big move like that would become massively crowded, with panic sellers and people that are trying to short hedge, after we've already fucking corrected 40%. Excuse me. So I think that I'm mindful of levels to the downside in the higher time frame, but we're adequately distanced from them to where they shouldn't be on the forefront, right? They shouldn't be on your forebrain, put it that way. So 60K, the higher time frame level above us that I'm most focused on. The trend right now, if we're just looking at BTC on the low time frames, and I said this on a stream the other day, we see absorption at the lows very clearly and most focused on Bybit and BitMEX in terms of futures. So you see the transition, higher low, lower lows in CVD. Spot CVD still trending upward. Spot CVD more one-sided though, because there's only one type of seller. But most importantly, I think with BTC, I don't think I have to keep saying that, right, guys? I don't have to keep saying fucking BTC. Is as we're approaching these highs again for the umpteenth time, it's not the case that in terms of the same amount of open interest, that we're at the same amount of crowding as prior, from what it seems, right? So if I look at futures and I just look across the board, the funding rates, for example, they're really, I would say everything's pretty much even keeled. Bybit is trading neutral. Predicted is 4 basis points, but neutral right now. BitMEX neutral right now, predicted neutral. Coin margin are what I'm most focused on, not USDT. Coin margin are, those contracts are where you're going to feel the pain of convexity to the downside, right? So when people are very long coin margin contracts, those positions, the result of those positions going against them is much more painful because they're margined in the underlying, right? So this is what leads to longs losing value faster, essentially the downside activity being more painful for longs, or excuse me, how should I say this? The counter trend activity for longs is more painful than it is if you're short and the market goes against you, right? Due to convexity. So convexity being, we're looking at something like this along the curve, right? If you're long, right, and price moves up, diminishing returns, right, in coin margin contracts, whereas as price moves against you, things speed up against, not in your favor. So coin margin contracts are where I'm really looking for, one of the things I always look for is, where is one side offsides, where is potentially one side getting it wrong, where are their pain points, and not only where are their pain points, but how many people are going to get hurt, right? So how crowded is the market? And just trying to oversimplify these things and say them, sort of personify them, even though there are people behind them, say, where people are going to get hurt, where are traders going to get screwed, where are a lot of traders crowded into a pocket. And it doesn't seem like we're at that state, at these highs. Funding is pretty, it's pretty low, right? I get more concerned with, approaching a high again. Open interest is doing something like, let's say this is this is clearly the trend in price. Meanwhile, we're doing something like this in open interest above a previous high, and funding is just really blown out over here as well. So towards the right side of the structure, things become more and more blown out. And then it's just a sign that, hey, there's more work coming into the market and there's less results to show for it. So more activity, less ground covered. And clearly at that point, you have people that are off sides. So I think that looks good. It's not like futures basis right now. It's not like we're seeing that's really blown out across the curve either. So I think we've done a fairly decent job, and are still probably doing it of shaking out a good amount of those aggressive longs. And I feature this platform a lot, and again, I'm telling you guys, go onto their YouTube channel, go on to Genesis Volatility's YouTube channel. But if we look at open interest, oh my God, it is flatlined. Wow. Okay, we haven't been this low since going back to, and I could actually log in because this email is, they gave me a team email. We haven't had this low level of implied volatility since going back to, I think, Q4 of, let's see, 2020. So, I mean, we're well beyond. I mean, how far out can I go with this right now? We're going back into, yeah, all right, so I can't look back further than that. I don't think I can look back further than that here. Either way, realized vol, implied volatility flatlined. So, how many times have we had a top where that was the case? We've only had a few tops, but it's very unlikely that markets top that way, period. And another thing to focus on, as I've said before, is we're at a stage where more recently the market got a little bit more pessimistic again, right? We could see that puts were trading more recently, a bit more expensively than calls. So this skew is just showing that there was a good amount of uncertainty again and less optimism, and I want to see that before we move up, right? When there's a ton of optimism in the market, when we see, hey, what looks like optimism? Well, optimism looks like the level not broken yet, but funding rates are blown out, calls are just being bid up a ridiculous amount. The market is very intent on the resistance breaking before it actually is broken, right? They're positioned themselves. So market positioning, I think right now looks good. So looking at some of the intraday levels, and we'll go down to some of the altcoins because I have a few mapped out. And what I'll do when I'm intraday trading is not only I'm looking at not only am I looking at profile, but I'm even marking out key levels based on yesterday's structure, yesterday's rotation. So yesterday's high, yesterday's close, yesterday's open, yesterday's low. You just think about the concept of progress and advance, right? Progress and advance or decline. And if you're losing the previous day's high, losing the previous day's close, and you're looking like what is the beginning of a trend, or maybe looking at what might be a trend beginning. Once you start to lose that previous structure, it just shows the momentum is not exactly there and the market is not as one-sided as maybe you would like if you're looking for that trending position to begin with. So looking at BTC, the area that we found resistance is not it's not nothing, right? It's not the case that we've just turned here because the market has lost momentum here. This is a reasonable resistance to expect. If we look at 8 days prior where we were forming this composite, so how does this get qualified as a range and go from a trend to a range? Well, you have value migration, so value area, value area, value area, right? So that shift in value higher, volume is supportive of that, volume shifting upward, and then what you have is a little overlap here, and then this is all overlap. So if I open this structure, and before I do that, I'll show you what we're coming into. This is the point of control of those 8 days, so of that range. So this is the fair value level within it. You'd say that that's probably one of the stickiest points within there because that's where a ton of risk was added. This is a place where buyers and sellers were really willing to do business, and if you're coming back to them, just think like if you're coming back to them and you had gotten long up here. So let's say that you are a long. I don't even know why I write this out. I'm articulating it. Let's say that you had gotten long up here prior thinking that this was going to lead to a move upward. Well, if the market pulled down, you're not too certain, it never feels good. It's easier to look at price and say, pulled back and it's going to go back up. But when you're in a long and it's still against you and you haven't gotten stopped out, or, the market is, you're still in the red, a ton of activity came in over here. There's a ton of people that got long. If the market comes back to this level, they might think, well, it feels good to get out of position and get back to break even. Like, whew, wipe their forehead. I dodged that bullet. I'm going to get out and I'll reassess this, if now a certain higher criteria is met. So what happens? They sell where they did business prior. The market actually finds resistance because of their, mass exodus. And now you've created a bunch of people that are future buyers, right? You take buyers out of the market. Okay, when you have a lot of buyers in the market, you have future sellers. When they sell, they're future buyers, right? So now the market has its first pullback off of this previous area where a ton of business was done, and now maybe their criteria is shifted slightly higher. So what you do is it's not just a very, this is not an exact science where it's like, okay, now they're going to come in at, the value area high, and now we know that. It's just a matter of the psychology that takes place. They got out at break even, market pulls back slightly, but it has this, it has this conviction from the low. Maybe there's more oomph behind this move. Now it's moving upward and they're on the sideline and they're going to help this move now because it's above their last level where they exited and entered in the first place, and they end up helping by FOMOing in. So this level is not, it's not just kind of pulled out of thin air. This is where the point of control is within this entire structure. So the same thing happens, if all this activity up here, two-sided activity, right? You get a ton of shorts up here. Now they're thinking, all right, so high up here, I'm adding to my short. Oh shit, the market's coming back to my short. Now those longs are getting back in because they got out at break even. Now it's moving higher, and now those shorts are thinking, ah, crap, I got to get out too. So they get out and they cover, and then this is what helps markets have these massive swings. After you create a ton of volume in a level and you create this kind of pocket, when you pass through it, it's what creates that slingshot effect, right? So think about this as like, I don't know why I'm even going to go into this. Like in a movie, how they talk about going around a planet on a spaceship using the gravity to slingshot in the opposite direction. That's the way I think of this, right? The market has, shorts were in control over here. Market's coming back to this very dense area. And what happens as the market comes back to this level, the process between longs and shorts closing and reopening, covering and what have you, creates this move that's very violent in the opposite direction. If you could retake where this activity where the most concentrated area of activity was. So, all right, so now just to get out of this, the value overlap I was talking about, all of these value areas being sort of in the same general range, right? No real conviction outward, all right? I always say all right, so you have to bear with me for anyone who's probably picking up on that. All right, all right, all right. So outside of this range, have a nice 3-drive structure, bullish 3-drive structure, because you don't even need to make a third low, which is sort of a telltale pattern to look for. Test that anchored VWAP that was off of this break. So there's an anchored VWAP right here. If I put it on the chart, you'll see, rather than just acting like it's there. So the anchored VWAP from the point that we broke. So breakdown, most of the risk applied here, sort of a transition again. So that same dynamic I was talking about between longs and shorts, covering, getting back in, and so forth. Just think about where risk was put on and how you would behave when market goes against you and goes for you. So now a strong trending move yesterday. I think that on the lower time frames, the levels that I'm most interested in, you want to see that you're holding above yesterday's range. But yesterday was a nice trending structure. Value migrated higher, so the shift in value. Point of control showing that volume there was a distribution of volume throughout this trend that was supportive of the trend. You're holding the point of control very good. You don't want to be back below it. So now we're looking for this level. You don't want to see it tested multiple times. Now we're looking for sort of this 57.7, to 58 level hold. And that is back within, the trouble about that is you're starting to go back within a prior day's range. So, yesterday's close is right here. So we're looking at falling back within yesterday's range, but if we could come down and show some respect to where most of the volume came, that's it's not exactly like you have to stay outside of prior day's range for trends to be for trends to remain consistent. If we start losing for BTC as far as intraday structures go, if we start losing, this 57.7 level, right? So this point of control, start trading lower. I'm just going to be looking at these low volume levels to act as an area to flush. So around 57.2, 57.3 area, you look at sort of the areas where there was a minor gap within a trend, and we haven't revisited that yet. And a lot of times the market will sort of clean these areas up over time. You don't want to see the trends immediately do this because it just shows the trends are kind of just falling back on themselves. But for something like this, I think it's always important to remind yourself what it's doing on the higher time frame anyway. We see that on the higher time frame, it is constantly coming back in within prior days ranges because it is really just compressing overall. So be mindful of that. Higher time frame structure is one of complete compression, so it is folding back on itself many times. And I think that you do have to, if you're bullish like myself, you have to remind yourself of that this at some point might come to more of a point than any other period prior, and it might not be a good idea to really assume that if we're back within a prior stage range, you're going to sort of throw the baby out with the bathwater on that one and say that there's a major change in the trend, right? Just looking at intraday levels, there's a lot of levels of play within here, so I'm happy because of that. So 57.2 I would expect to act as a bounce, and what you're looking at also is a nice amount of confluence. So value area transition, so this is the exploration lower outside of that 8-day range. You have this nice B profile, ton of activity. Trending day that follows, you have the value area low down here, prior day's value area high. So there's a good amount of interaction in this level where I would say clearly, your 57.2, your 57 area, right? And then this is your anchored VWAP from the original break. This all should act as a decent level to catch a bounce, right? At least for some intraday plays. I don't expect that from where we are currently that we just are going to do something like this. Right. To me, it would be very unlikely that would happen. We would have, I think, a lot more bounces ahead of us and a lot more sideways activity before a major rollover like that would occur. So is that clear? Does everyone more or less understand what I'm going over when I'm talking about where activity is coming in, why I'm interested in the levels that I'm interested in? The confluence, it serves to increase confidence, but it doesn't always mean that because multiple areas line up that it's going to just serve as a brick wall, because as you can see, if we zoom out and I show you what these dash lines are, prior week close, prior week open, and again, always the concept of advance and decline. Last week, so let me just zoom this in So this prior week close, prior week open, in a strong trending market, you don't want to spend too much time coming back within any kind of weekly structure, but the case has been for the last month that we've been within a range, right? It would be a great sign to start seeing that prior weekly opens, prior weekly closes, in this case, a prior weekly close at the high, if this continued to act as support. And like I was saying just a second ago, that prior weekly close up around 58, 215, yesterday's high, yesterday's close. There's all this confluence over here. Why more confluence is not acting as better support? Well, it's just you're trying to increase the probability in your favor, right? And look for a really well-formed level. And a lot of times, the most confident confluence is going to be off of very high time frame swing points. So there's been a lot of, as I've said many times before, sort of muddy price action in this general area. Expect it to remain messy until it's not messy, until it's clear that it's not messy anymore. That might sound overly obvious, but that's just the way it is. Like, it's messy until you see 61K, right? And then be thankful you see 61K, and we're out of discussing this shit over here. Very clear. Good, very clear, very clear. Let's take a look at some of the alts that I'm hoping to trade in the near future. And again, these are also, some of these are on my watch list, and also some of these are on Phemex or Phemex. So if you're interested in signing up, go to Phemex.trade. Use the exchange you're most comfortable with. So I tell everybody, why I think certain exchanges are advantageous over others, what advantages I think Phemex has. But some people are just, they're used to a certain user interface and used to a certain experience. And by no means are we trying to enforce anybody onto any particular exchange whatsoever, right? We are proud to be partnered with them because we think that they do offer a really good product. But we're looking at Wi-Fi, Doge, Dot, Uni, Link, and Aave. Not really as interested in Aave anymore, so we could go ahead and X that one out. Not really as interested in Link right now, so we could X that one out. Uni is not, to me, as interesting either anymore because it's kind of lost the rate of advance it had been putting up in the last couple of days. So I'll look at that on the main chart. Wi-Fi, Doge, and Dot. Doge is always going to be great to trade. So what you're looking at right now are standard deviation bands for VWAP. I finally found one that was pretty accurate. Everyone else found it before I did, but I like to test it myself, right? I've seen VWAPs on Sierra and Quantower that are completely different from TradingView. So, if you're going to be leaning on a tool, like, you better lean on it that it's calibrated properly, right? It's like, I'm a great marksman, and then you hand someone a rifle and you give them a scope that's like not zeroed in whatsoever. Like, I don't care how good of a marksman they are, they're not going to use it properly and not going to be able to target if their scope's not zeroed in. Unless they're using iron sights and they're ridiculously talented, like Kilgore. So Wi-Fi and Dot, I want to focus on these because I think that Wi-Fi, I think, is a sleeping giant. And I went over Wi-Fi in BlockRoots. So we'll go to Wi-Fi really quickly on futures because I think that this is something worth pointing out. Wi-Fi has a lack of participation where it is currently compared to previous highs. So I think a lot of people are sleeping on this. And it's the same concept as like why I don't care about Ripple. I think Ripple XRP is going to come back down, but it had a pump in it because there were so many people that were short it by not being it anymore. Right? Not maybe outright short. Like when I use the term short, I'm not saying they have a directional short position. They have delta, right? I'm talking about they're on the sidelines. Like they're out of their longer core positions maybe they were in prior because of some regulatory fear. Whether or not it's how it's going to pan out is not my place to figure out. But what we're seeing is that Wi-Fi is back above prior highs, and Wi-Fi is not back above prior highs in open interest. So what this says to me is that there's less participation in this move, which to me looks like any kind of participation that would be back at these levels would lead to a much larger move. Like we're not seeing reflected in the market right now the level of activity that we saw prior. Now you could think like, hey, maybe they lost all their money. You take longs out of the market, you have future longs. We've seen many times how people, will come back to the casino and sort of spend all their money pulling the slot machine. So not to say that the markets are a slot machine, but anyway. So I think that there's less participation in this period, and I think it's in a really attractive level, regardless of your opinion on that, right? If you have a foundation built on market structure, that's a good foundation to go off of. It's probably going to offer some late signals from time to time. You're waiting for a certain level of conviction, a certain level of confirmation, which implies a certain amount of the trades behind you. especially if you have higher time frame levels. But the benefit of it is, I would say, in terms of certainty, I think you do have a little bit more certainty, because when you change the higher time frame structure, you change the bias of a lot of traders, not just lower time frame traders. You change a 5-minute range, you change the opinion of scalpers. Like a 5-minute range within a daily massive structure doesn't really mean much to swing traders and position traders. When you change market structure on the higher time frame, at the first level, for example, you have scalpers that can play down here. You have swing traders that can play down here. You have position investors and the higher time frame likes that now can play down there. So this level, once you've reestablished this level, so you're back above all of this, this area that served to turn the market. Once you're back above it, the first retest to it, right, the first return to it, just by that change in higher time frame structure alone, you could say that there's a higher probability that there's going to be more participation at this level now. We're retesting a daily level. Scalpers are going to be there, swing traders are going to be there, position traders are going to be there, like I said. So just think, where is most of the participation going to come in, and consider participation as sort of in this case, when you have more participation, it's swimming up a much more, let's say, rapid moving current, swimming against a much more rapid moving current. In the case of changing higher time frame structure, it's like trying to swim up a river, right? It's impossible. At least I would say in the first test, you should always bet on the level acting as support, especially after you've broken the level before like this and then came back to it. This was, just think in terms of, this is your sellers up here that have done their job. Well, where are they now, right? They sold the level already. There's no reason why we should be able to come back to it pretty calmly, put it that way. If you return back to it vertically, vertically returning back to a level from a distance, highest probability of acting as resistance, I would say, right? Slowly coming back to it time and time again. It allows you to have a nicer defined stop because the market is getting closer in terms of lows, and two, it just makes it much more, I think, dangerous to try to fade this level. The market is hanging out here. It's imagine like, if you see, this is a really poor analogy, just never mind, I'm not even going to go into it. The market has been hanging around here for a while, right? So I wouldn't try to fade that. Dot, something that I am in position in, but now, I hate to say it, I'm not doubting it, but I like things to move a little bit quicker. And dot to me, though, it's still cleanly defined, so I'm not going to be changing anything. I have emotions too, though. Dots, again, higher time frame market structure. All right, 4 taps of this level, first test, and I think Sol and some other higher time frame big pairs have done similar things. So not FTT, but I think I had Sol at some point. So Solana, better call Sol. Clean ranges, right? The benefit of clean ranges is that when it's broken, when it's changed, like it's obvious to everyone, like I said. Now with this though, if we just go to the one thing that I'm a little bit concerned with, is Polkadot's massive already, right? So if you see that, if you're uncertain about where you are, I'm uncertain about where we are within DeFi and alt at this stage in the cycle. I think that they're going to have a phenomenal summer, but I think everything's going to get washed in the next month or two. At some point, I think that the things that you could expect have less upside are the ones that are already pretty well inflated. And if we look at Polkadot, it's already at a $40 million market cap. Not to say that, that can't change, can't double, go up 25, 50% from here, 100% from here and double, but it just makes it tougher to move this around. So if we look at, let's say, for example, we have two options to long, right? So if I look at an option to long between Cake has a clean retest of structure, Cake has a clean sort of best of both worlds in terms of bottoms and reversal structures or continuation for a cup and handle, and I'm not a pattern trader, so don't quote me. High volatility bottom, low volatility accumulation, rounded bottom markup, main level retested, return back to the level in quick fashion. So regardless, you call it a cup and handle, I don't care, or of Adam and Eve, it's high volatility, low volatility, high volatility, low volatility recovery, right? This is good stuff in terms of a pattern. So if I see that we're putting in market structure in a favorable way on one chart, and this has a lot of popularity, and we look at, DOT, a lot of popularity, nice market structure change, nice shift. If I see that one is like, I think has more legs because it's let's say it's reasonably smaller in terms of market cap, and think about market cap in terms of participation, you know, I'm probably going to go with the one that has, if they're close in terms of how popular they are in the cycle, I'm probably going to go with the one that's a smaller market cap. Like, I think a lot of people are going to sort of try to pick between what details distinguish them, and I think that they're going to go with that. And I think, you know, if we're looking at Cake, for example, there's more to it. So this is more volume than any other pair in terms of DeFi, in terms of DEXs, when you look at Cake. So Wi-Fi, I think, is really attractive. DOT, I think, is attractive from a structural standpoint. Not going to change too much. I went over, let's see, I went over LTC last time as well. This I'm still long. So this you could trade on Phemex as well. So does anyone have any questions right now? Because I've been kind of blowing through this. Let's go through some of your questions. All right, what do we got? What do we got? SRM breakout looked prime. No shilling. All right. Yeah, JE, I think that you could see that a lot of people are waiting, more or less, like have half of a position on, semi-neutral. Cool. Thank you, thank you. Chart looks bad, but it seems legit undervalued. Yeah, I don't know a whole lot about Sushi. I know there's this whole thing about their lockup and now that being, I guess, early investors having access to their shares and, excuse me, their allocation, and whether or not that you're seeing selling pressure come in advance of that, or that there's some kind of copy between them and Uniswap and some issue with rather devs copying Uniswap's code. I don't know the extent of it, so don't quote anything I just said, because it's not informed. I don't get too much into the fundamentals, too much into it, right? Like, there's some people that know the ins and outs of everything when it comes to the technicals with these. I don't, so I don't like to even start talking like I have a hand on it, because I don't. I know the signs to look for when the market is interested in something, you know, what technicals I look for that are not just TA lines on a chart. But aside from that, I don't know anything internally about this enough to talk about it. It doesn't look to me, you know, one argument could be made that a lot of selling has been realized now in advance of what is anticipated to be a bearish event. So from what I've heard, so maybe the market has already realized a good amount of selling from that. But either way, you know, in terms of market structure, you know, the last thing I like to do is talk about weekly and daily levels if they're you know, very binary, prescriptive. You know, if this then that, you know, situations. You know, you have you know, what is a daily trend? What is a weekly trend? It's a series of higher highs and higher lows. Oh my God, you know, the whole thing changes when you lose a daily or weekly level. You know, the trend has to start just making an about face when you lose the weekly low. Like, that doesn't have to happen. A lot of times what happens when that happens is, you know, that first order kind of thinking occurs where people see that the weekly level is lost, you know, weekly consolidation before this last move. Oh, that's lost. Let me short, let me sell, let me get out. And then you have more fuel for the move up that catches everyone off sides by continuing upward. So you know, from a technical standpoint, as you can see, I have this kind of channel marked out. I like structures that look like this, right? So we're at that weekly level. This is a consolidation off of what was a trending period of days, right? Consolidation leads to what? Continuation. Oh, guess what? This one didn't. We're kind of trying to come back within this range. So for me, when I see a pattern like this, trend, range, cleanly defined range, highs and lows, these are trigger points for a lot of traders, you know, outside of this low, outside of this high. When you do this and then you reclaim it, I look for this, right? Same to the upside. You know, you're looking at, you know, everyone sees a flag and we're in a bull market. You know, maybe we're really extended at this point. Everyone sees this as, you know, maybe a flag for continuation. Oh, pop up outside this range. Oh, guess what? We lost it now. We've taken these highs. I'm looking back down at these lows. And what a lot of time happens is you end up, you know, your continuation structures end up looking like that. It's the concept of, you know, patterns as well. You know, people talk about, oh, a flag occurs like this, like prototypical pennant flag. This is what you look for. Retest at this high. Like, usually it doesn't occur like that. Usually it's like, oh, everyone focus on this high. Oh my God, breakout. Oh fuck, rinsed. And then you know, this comes back down to these lows and chops around for another 2 weeks. And those patterns are, a lot of times they're gamble. But even the ones that occur favorably, you know, you get something like this, and this makes me more bullish, right? We don't resolve all the way to the high, break down a low. Oh my God, everyone pukes. Now we're back within. And then what your structures of continuation tend to look, in this case, if you wanted a true pattern playbook, they would look more like this, right, than anything else. And you've grabbed this, you maybe even came down here. And when I see that under over on any kind of structure, I immediately, it's like, all right, this is, we've trapped a bunch of people, we've thrown a bunch of people off one side. You tip one side of the boat, right? So what happens when you tip one side of the boat? Okay, you overweight that area, it creates an imbalance. Okay, so, oh shit, I didn't go to the chart. Hold on one second. We're talking, oh my God. So let's redo that whole thing. Okay, so I was talking about the weekly structure. Jesus Christ. Don't worry, guys. I was talking about this weekly low right here. So meaning we lose that weekly low, and then I was talking about this flag. So this little flag, this little consolidation here, what I was talking about was losing it at the low. Losing it at the low. And Jesus, guys, you know, how many times have I done that? I am only human. Um, I was talking about having a structure like this, right? Losing the low. Oh my God, it's going lower, and then it reclaims it. And the patterns I was talking about that were how they more realistically occur. See, this is how fast I could go over things to begin with, but I'm so talkative that it took me, I did it probably 10 minutes the first time. Whoever knows how much time passed between when I realized when you guys said something. Talking about flags, like they usually don't occur like this, right? Sometimes they do. But a lot of times, for equal amount of times, they occur like something like this. Oh my God, we've broken it majorly, and then, sorry, we've reclaimed, and leads a continuation like that. So I apologize for that, guys. Let's take a look at, what did I have before? Oh, Uni is, I don't know, Uni was holding a trend line on the daily that seemed pretty nice. This level of progress. It was more recently, it was more, excuse me, localized to this activity right here. So this is an example. You know, you have a very cleanly defined area within structure. And what it does is it defines a lot of biases of just traders who just trade simply off technicals like this. And what you have is, oh, this is a trend line support. And while a lot of people are just going to be getting overweight short because, oh, meme trendline support, now resistance, I'm looking at this like, okay, there's a lot of people that are doing that. So when this breaks above here now, I think that this is clearly, obviously at this point, a long, right? So if we could get that long opportunity, that'd be fantastic. What I would do, and I was doing earlier, is if I'm short-term trading alts, and I would normally be using a VWAP. And again, this is a tool that just, it really makes it less subjective, right? A lot of times when I'm using a VWAP, I'm seeing, you know, signs of exhaustion in volume and how far away we're away from VWAP, and expecting we're going to get mean reversion. Looking at structure as well. This tool really makes it very easy. I have no connection with this tool, but I know it sounds like a shill. But if we're trading alts in the lower time frame, many times you're going to see that there's a lot of FOMO behavior in alts. So you're going to get a lot of these times where a ton of volume comes in, market swings heavily in one direction, and these do mean revert all day on the lower time frames. The long-term trend might be something like this, but the trend within that is constantly doing this, right, in these messy alts. So what I would do is I would set my triggers. So for example, you know, if we're looking at, and I would be looking at yesterday's range in terms of standard deviations compared to VWAP. If we're looking at, for example, something like, not Aave, but Doge, I think is a better example, maybe DOT, I would be marking out the far ranges of where most of the activity came in. So setting alerts in these areas, so be warned. All right, so I'm on a different charting platform. This is the desktop platform. Setting alerts in these areas to start paying attention. Not just to blindly trade off of some tool on TradingView. The purpose of any kind of tool like this, or rather like that, is to be able to have something that allows you to step away from the charts and place an alert around it to say, all right, this is when I need to come back, right? This is when I need to start paying attention. So for me, for something like this, for example, that might be, all right, so I want to start paying attention when we reclaim 31, right? So I'll set an alert for when we reclaim 31. And once we're breaking above 31, maybe then at that point I'll start looking for some type of short-term opportunity. Otherwise, we're just going to be chopping around most of the day and waiting for BTC to really pick a direction. So I don't know if there's anything popping up right now. That's the trouble with, if you're trying to scalp during a stream, it's much easier to do it with just BTC after a certain level of volatility. Otherwise, you know, if I'm looking for a scalp, for example, in DOT, the most interesting level for me would be back above VWAP, which would be probably back above yesterday's high, which is around 41, or a playback at yesterday's range low. So if we go to DOT, and you'll also see that we'll have marked off yesterday's low, right? So it's not marked off, but excuse me. I meant the sessions would be on. I think at this point, what am I on right now? Why is this? Wait 1 second. Am I on? Oh, I'm on a 30-minute chart on this one, and I'm on a 15-minute on that one. I was getting a little confused for a second. If I was looking for a play right now in DOT, it would be right around 39.50 level. Playback at these lows. I wouldn't want to just get involved over here. So, greetings from Agbobutu in Kogi State, Nigeria. Hey, what's up? Yeah, we'll take a look at Alpha. Okay, 1 sec. Just make sure I'm not missing anything. Sol is just a beast. FTT just a beast. Alpha, in and out of Alpha too many times recently. Should have been a holder from the beginning with my core position. Got out of that and have been trying to trade it ever since. And okay, so here's a good example. A few things. I think that this is the benefit of this is now you have a very cleanly defined range, right? So if we go onto the weekly, first here's your weekly high is high, highest close, high and low. Last daily major pivot, right between that weekly level and around 214, and this was a level that I had been focusing on with Alpha that had somewhat disappointed me, right? But the last thing I want to do is say what I was looking for was this pattern to continue, right? For this progress to continue along this line, sort of like just a rate of ascent. Losing it for me doesn't mean it's a short, right? It's just now that I focus on this level and I've sort of said that this is defining what I think it is defining what had been the pattern of the last few days. Now that we've lost that, I'd rather see that we're back above, respecting this diagonal trend line for a play higher. I think the trouble with something like Aave and even saying that you use a system like that or focusing on a trend line like that is that this can continue for a really long time, right? You could continue to chop around, similar to what Link did for a really long time, where it was like, is Link a long or short? You know, I'm constantly waiting on the breakout for Link. The breakout for this is the worry of short-term of traders who they want to get in the long-term trade, but they're focusing too much on the lower time frame. With Aave now, I think the most clear levels to get involved are not along this trend line, but now that we've defined what is a range for the highs around, between 230 and 2, a high conviction move after losing this even looks more attractive. So something like this, where now we're above this, I think sets up a move back up to $3. But the problem is, like, you could say that and have best intentions, and sometimes it's just the market is not, sometimes the market is no longer in that kind of pump mode, right? It also depends on conditions. Like when clean structures are painted and things are ripping, then this doesn't last long. It moves quickly. When rest of the market is chopping, there's like this energy of chop that goes through everything, right? Pervades all of the pairs. So, this pops up, oh, this was, Cantor and Clark's high conviction level. Guess what? Now we just took the high and we're doing this all over again multiple times before 2 weeks later we finally break through. And then you break through this high and guess what? That's the point where we're at the end of, May or end of April, and then the market dumps, right? So you focused all of your energy around this. The benefit of a structure like this is I think that since we've lost these lows and now you're putting in a swing low right here. It's not a swing low, right? It's just a more recent daily low. I think that you could say, all right, weekly low close, high close, mid of this structure. You know, if anything in a strong trend, you want to see that the top side of this structure is favored. You know, this is a good area to place a stop below here for any kind of trend continuation. If we're back below this low, we're probably coming back down towards these lows. Like what it looks like at that point is now the market is not even trying to make an effort upward anymore. We're starting to actually roll further back down. And I didn't mean to make the mouse jump like that and draw something that extreme. There's actually a little bit of a weird lag with my mouse right now. So yeah, a couple other pairs have been, I've been got involved with and was lucky enough to get in on early. I've been sharing these KPAD and Orakuru, so ORC, and these are things that I have no intention of selling early. I know like people get early, they get early positions in new pairs, and there's a lot of these seed investments going on right now in pre-sales. It makes no sense to sell too early because it's like a lottery ticket, I feel like, for some of these. Now, the one thing about them is obviously you want to be confident about the project, and I think the cool thing about Orakuru is it's audited and it's the only BSC Oracle. So that's pretty awesome. And KPAD as a launch pad, I think, is going to launch a bunch of shit in the next couple of months that'll really, if timed properly with the rest of the cycle, will have legs. And I don't like to pull any punches. Like I don't bullshit whatsoever. Like I'm not in these things for the long-term promise, right? I want them to go up. I want to triple, quadruple, quintuple my investments. So turn mic up. Huh. Oh, you know what? What is going on? Can you guys hear the mic? What's going on? Yeah, you guys can hear the mic, but I just realized this entire time I took out, what a fucking idiot. I took out the plug for my microphone and I plugged it into a mini charger that is a portable charger to charge that. And I realized just the entire time that was not plugged in. So my mic that's running right now must be a mic that I'm unaware of, where it's like it's probably the what's it called, the webcam mic. Jesus, listen, I don't promise any good stream. I don't promise good streams in terms of audio quality, in terms of video quality. That's stupid because you have to have good audio quality and good video quality. We don't do anything extravagant here in the streams. We try to talk about the market in the best way possible. We don't try to have the best thumbnails and all that. That's a fucking excuse. That's a really lame excuse. I apologize. But yeah, Ray is pumping. So the thing about Ray is, and again, I said that this was a very much a matter of where we were within the cycle. I was looking at Ray earlier on, and I was looking at Ray compared to SRM and Sol. So how they transpired earlier on. You always get a first pump correction, a pump, and then a much longer consolidation. And I said why. A lot of times there's a lot of people that even into this, let's say, into the consolidation that follows, you might be thinking like, if you look at SRM, for example, or no, let's look at, why is this not, what the fuck is with this lag? You look at this, right? You have a first pump, flag, second pump, long consolidation. You might be thinking like, where are all these sellers coming in? It's a new product. Like, why does this take so long? And I thought maybe this would also need to occur with Ray. So I was always wondering like, how far into this with Ray are we? Are we still like at this point where we have this to go through? And the idea is, when something is new, in the beginning of when the market is moving up, yeah, it can have legs early on and you could get a bunch of people crowding in and everyone's getting rewarded. At some point you have like really late people though. All right. So really late, and it's constantly just a cycle of traders getting out at break even after the first domino goes. All right. And the problem is it can last for a really long time. You don't just have to wash those late buyers in. They're early because it's brand new, but they're late because they're not a pre-sale buyer. They're not early partner. They're not people who have their early lockup. So you might think like, all right, those are out of the system. Like, where's all the selling coming from? Well, you have a lot of people that have a ridiculous cost basis that's not even showing up in the chart. That's like all the way down here. So them selling here, it doesn't matter. Like they're thinking, oh, this is a great place for the market to range. I could get out of my positions with less slippage. I could use limit orders now, right? And they're like, I don't care about, like, maybe it'll pump further up, but I'm up, 100x. So you usually have to work out a lot of this low conviction in the beginning. And I think that Ray, who knows now? Because it's always a matter of timing, right? Like if this is the beginning of everything taking off, maybe that does that, maybe that doesn't, maybe there's none of that because it's like long only mode. The one thing that I was worried about was like the market was we have been kind of equivocating and been on the fence, and when there's less conviction overall, we see more pullbacks in alts, we see longer corrections, more of that take place. With it though, right? My whole theory is really, a lot of it earlier on is structure because you don't have a lot of stuff going on. So now that this level has been tested multiple times, I would get long again. And I was long in this. I don't remember exactly my original long price. It might have been 3 something 4, but I got in some really awesome trades with this up to 9 to 10. Don't sound awesome, but I compounded multiple 100% returns, I think, in a short amount of time. And I think it was 4 to 8, and then when we corrected, it might have been, that might not have been exactly 100% each time, but I made a good amount of money trading this, put it that way. And now this clean high, I think that if we're back above this now, like I'm not going to sit here and say like, oh, it needs to go through more of a correction. Like, nah, I'll just get along here, place a trailing stop, and then yeah, if it washes out after that, fine. But this might have legs for another 100% up. And the benefit of clean, tight structure like this is that you actually can afford to say like, yeah, there's not too much edge in structure other than in the market, in the way that the market is now, there's like this herd behavior behind anything that breaks higher time frame structure. As simple as that is right now, my mouse is now, something's wrong. It's my mouse battery for sure. I have to cycle through my batteries because I think I did that dumb thing where like I put a battery that was dead back in my drawer, and now I don't know what it's like I'm playing like Russian roulette with dead batteries and real batteries, like constantly putting in a dead battery. But spend too much time at this desk. It just shows you, just throw these things out. Yeah. I totally agree with Josh. In 6 months, 90% would be gone. So Ray does look good. Yeah, Ross, good idea. I could also lick the end of the battery for some fun too, right? Old farmer trick, and if you put batteries in the freezer too, apparently that has some kind of effect on their power output. All right, I don't know if there's a whole lot more to go over. It doesn't look like there's many opportunities setting up in terms of trading right now because we're all waiting for the higher time frame levels to break. Wi-Fi again. I'm most interested in Wi-Fi right now because I think that people are shorted by just lack of participation, period, by just lack of exposure. So I filled half at market. I'm hoping that we come back down to 43 because then I'll have the rest filled. Yeah, Hannibal, I just got the brand new Razer 4K 15 touch laptop that's coming because I'm going on vacation. I got a rental house for June, so I have some really cool toys coming. So I'm excited about that, and I have that. I have a nice rechargeable mouse that's coming along with that. TKO. Let's see. I'll look at TKO and then we'll wrap it up. I think it's pretty clear in terms of BTC what we're looking for. Come on, mouse. It's like someone else has the control of the mouse right now. That's how it feels. All right. TKO. Yeah, I mean, TKO seems like it's just in a grind downward. So here's just like my 2 cents on new projects because I don't like to, sometimes like you get a chart like this, I have to chart it, right? Because I don't want to let anyone down and say like, and not give a decent response. But the truth is, in illiquid coins, we see it with a lot of the lower cap pairs. This really doesn't mean too much, honestly. Higher time frame major swing points are important, right? You build up confidence when you retake them. You lose confidence when you lose them. In a really new pair and an illiquid pair, it doesn't take much to move the market. Like someone panics, they get out of the project, it nukes 20%. They come back 20 minutes later and the project's up, right? For a lot of new pairs, I feel like you do have to not look at the chart. I think you actually hurt yourself if you look at the chart too much. And this is the case with lower market cap pairs because again, they're very illiquid. Structure is meaningful from a psychological standpoint, the way it is with a lot of other pairs as well. But the market is easier to push around, right? So I think that by looking at the chart too much, you might get thrown off based on the opinion of one person expressing themselves by getting out, right, in a panic. 2 hours later, the market's up 50%. Right? You've seen this happen so many times. So I've noticed, like, I chart really new coins. Like, for example, like this. Let's just look at this for example, right? We're looking at, in terms of swings on higher time frame, we don't have any yet, right? It's so new. It's 3 days in. So in terms of swings on a 4-hour time frame, like what do we have? Okay, in terms of just this 4-hour trend, we have more recently what looks like a little SR flip. Right? This was just in terms of the brief amount of time we spent here. Briefly support, lost it, retest, yada, yada, yada. Now, with the basic approach of using support and resistance and structure and how that increases confidence, what we're saying is we retake a level, we start increasing confidence because the pattern has changed, right? Making a series of lower highs, lower lows. Now, this is in the making possibly that we're going to make a higher low and a higher high, right? The transition is maybe beginning to take place. In the larger pairs, like I think you could have more confidence in that because levels are more important. In lower caps and thinner pairs, I don't think you could hold too much onto that or put too much. I don't think you could base your decision making too much off of that. So with these, I think that it's honestly like in something like, so I just referenced before Orikuru, right? So we'll just look at this against BNB or BUSD. I'll put a line chart on because they're thin, right? And the price action doesn't mean too much. Very thin. Let me just get this so that you can even look at it. So it's very thin, right? Very brief amount of history that it has. So I mean, how much can we go off of this? In an hour, someone could sell a lot. It could be down here. 2 hours later, it could be all the way back up here. So I don't like to focus too much on the charts of things that are brand new. Other than what I would want to see, what you normally see is that in the beginning, Josh was mentioning this yesterday. There's going to be a ton of algo activity, a ton of bot activity, and you're going to see that there's a lot of volatility early on. So I don't want to be like longing without any structure established. And when I say structure established, I'm saying this is structure established, pivot, right? This is structure established, pivot. So from that, very briefly, we have levels that we could extend moving forward to where we could say, oh, someone really got involved here and someone really got involved here. Like they have skin in the game, they have skin in the game up here. Like the market turned from this level. But expect that it's paper compared to plywood, right? When we're talking about, when we're talking about small caps to mid caps. And then in terms of higher, big, in terms of like very popular high market cap pairs, majors, it's paper versus like titanium, or for any Wolverine fans, adamantium, in terms of how important levels are when big buyers and sellers get involved. This is like one person buying, right? This is like one person selling. Okay, so I wouldn't get too caught up on structure on really new pairs. But I think that's going to be it, guys. We're going to wrap it up. We are about, let's see, an hour and 15 minutes into this. It would have been nice if I wanted to trade DOT. So if we would have got that break above yesterday's close. But, we're back within a prior day's range. It's kind of I've gone over this many times. Like, you're accepted again, right? You're expecting maybe mean reversion behavior to take place, rotating back within here. Progress would be continuing to hold that previous level. We've fallen back within the value area. We're back around yesterday's VWAP. So this is an accepted area, meaning no one really has an edge. Like, this is a very welcoming area to get into position. You want to get in where there's imbalances at the extremes. So, and if you're not familiar with Phemex, go ahead and go to Phemex.trade. They always have something running in terms of promotions. Either it's a trading bonus, it's reduced fees, and trust me, those things can add up, especially the reduced fees. But that'll be it, guys. Hopefully, this has been a good stream for everybody. On behalf of myself, my partner Josh Rager, and the whole BlockRoots family, thank you guys for tuning in. And on behalf of our partners at Phemex as well. So the next stream will be on Monday. Until then, have a fantastic